Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a beautiful day. And in today's markets, guys, only normal market movement, not much in terms of news, really just the bulls doing what they do best and healthily pushing to the upside. Very decent market rotation on the day. So in today's video, guys, we're going to recap a few earnings that I have prepared for you guys. Number one is going to be RIVIAN. We're going to take a look at them. Number two, Disney. And number three, CELCIUS Holdings. I know Lyft was a big one today, but we're going to probably do them as a duo with Uber after they release earnings tomorrow and compare them and see which company represents better value. So after we cover those earnings, guys, we'll obviously get into our technical analysis on our major market indexes and major tech names, and lastly wrap it up with my portfolio and see how yesterday's trades went and which trades I put on for the day. So without further ado, guys, let's get right into today's video. And just at a quick little tidbit, guys, I'm very sorry. I have a bit of a cold right now, so if I sound congested or my voice is kind of awkward, I apologize for that. So let's get right into it, guys. SPY up 0.11%, QQQ up 0.02%, but we had some very decent rotation in the sectors of the market that have been kind of lagging behind the past week. That is financials and healthcare. They actually performed very well on the day. So very healthy market rotation nonetheless. Now, in terms of your one-day relative performance, guys, it wasn't as bright as that screen you saw. That was yesterday's trading. Today, though, fairly good, except for your big tech names. Semiconductors pulling a little bit back after absolutely ripping yesterday and Friday. Microsoft pulling back a little bit. Apple, kind of flat on the day, even though they were green. Amazon as well in that same situation. Google and Meta, though, very good day. Financials and healthcare were where most of your performance in the S&P came from today. And the bottom half of the market, guys, not doing very bad either. Just a healthy day of rotation. Now, on the one-day relative, guys, you can see that all the better. Most of your major sectors were in the green. The only ones to the downside were technology and consumer cyclical. Technology really being led to the downside by your semiconductor names and by the big juggernaut that is Microsoft. So all in all, guys, very healthy day indeed in the markets. No major action, just a day of kind of boring rotation as the bulls continue their daily push higher until they got topped out, and then we're just going to be looking for that daily higher low for the continuation of the daily uptrend. So before we get into more technicals, guys, let's take a quick look at our earnings for the day, and we're going to start it off with Disney. So taking a look at Disney, guys, let's take a look at what happened to their stock when they reported earnings this morning. They were actually down a whopping almost 10% on the day. Not a very good day for Disney. However, they did have a decent most recent quarter. They beat on EPS by about 10%, and that was not to be expected. And they did report revenue, which is roughly in line with estimates as well. Now, I'll remind you guys, the problem with Disney is threefold, guys. So number one is their parks and experiences division. The parks and experiences, since COVID at least, have been getting very, very expensive. And not only have consumers have been saying this, but also the company has said this on their earnings call as well, to where a lot of their parks in North America have diminishing profit margins. The costs have gone up, but revenues have not gone up as fast because they realize that they have achieved peak pricing power for a lot of their experiences, guys. Disney has pretty much monetized all aspects of its park really to the maximum level at which people are willing to pay. So if your revenue curve is going up ever so slightly like this, but your cost curve because of inflation is catching up to it, you have shrinking margins even though your revenue is going up. That's problem number one. Problem number two with Disney is its entertainment business. Now, it's trying desperately to catch up to the major players in the game, largely Apple TV, Amazon TV, Amazon Prime TV, and Netflix. It is trailing behind those three brands, and unfortunately, Disney's entertainment division just is not doing very well. They are a loss leader at the company. This most recent quarter, they did generate a profit. However, guys, it is just not the best streaming service. They are increasing subscribers, but they're still not profitable. And the reason that's a problem is because when they implemented this streaming devices back in 2017, 2018, this was supposed to be the line of the business that was going to propel Disney onto a new growth curve. But as of now, it has still not been doing that. And the third problem with Disney, guys, is their franchises in terms of movies. Now, a lot of customers and Disney employees alike have hinted at this in most recent earnings calls, and even the CEO has talked about this as well. Most recently, last quarter, Bob Iger said this himself, whereby People are unfortunately getting kind of tired of sequels, right? Think of how many Marvel movies came out in the last 10 years. All the Star Wars franchise that they picked up as well, they're pretty much at peak customer engagement right now. Any additional movies is not going to tilt the scales. They've milked those brands for all that they're worth, and now Disney is kind of struggling to put out more big name movies that aren't simply sequels of past successes, right? Their biggest movie last year was a follow-up to Avatar, but it's been a long time since Disney has actually put out original content that has done excessively well at the box office, right? So they're really falling behind in all three of those categories, guys, and Disney's turnaround story is going to take quite some time. Now, with that intro out of the way, let's get into Disney's earnings, and all of this will make a lot more sense as to why they're down. So Disney says streaming is nearly break even, but shares sink 10% on soft guidance. You guys know that this quarterly earnings cycle has been all about the guidance for the rest of the year. Now, let's see what Disney had to say. Shares of the company sank 10% as it missed revenue estimates for the fourth consecutive quarter and guided towards a softer third quarter for experiences. Why is this bad, guys? Well, because Disney is currently on its redemption arc. Excuse me, a little bit sick, as I said, right? It's on its current redemption arc. You can see the absolute disaster that happened during the pandemic for obvious reasons. And now it'll take them pretty much 6 years to get back to 2019. So any little bit of soft guidance and saying that EPS won't grow as fast as it will and revenue may not grow as fast as it's supposed to either is really going to hit that redemption arc story. That's why that matters so much. Now, Disney's total segment operating income jumped 17%, which was good, as the company's entertainment streaming applications, Disney Plus and Hulu, turned a profit in the quarter for the first time ever. When combined with ESPN Plus, however, the streaming businesses lost $18 million in the quarter, much narrower than the $659 million loss the division reported a year earlier. So they're almost profitable, but as a multi-line of business, right? So they have Disney Plus, Hulu, ESPN Plus. As a whole, it's still not profitable as a division for the company. It is getting better though. Disney Plus core subscribers, so here's another cue to the entertainment metrics, increased by more than 6 million in the second quarter, 217.6 million global customers. That's fine, but still a drop in the water compared to what Amazon and Netflix have. Total Hulu subscribers grew 1% to 50.2 million, not bad, and ESPN subscribers fell 2% to 24.8 million. So as you can see, guys, not really streamlined growth across all of their lines of the experiences division. Our results were driven in large part by our experiences segment as well as our streaming business, said the CEO Bob Iger in a statement. Importantly, entertainment streaming was profitable for the quarter, and we remain on track to achieve profitability in our combined streaming businesses in Q4. So still 2 quarters away, guys, from being profitable in streaming. This is the line of business that was supposed to save them and supposed to send them on to better profits and better growth expansion, but it's just been trailing behind. It's been underwhelming, to say the least. Now, here's their Parks and Experiences division. U.S. Parks and Experiences revenue rose 7%, and international sales soared 29% on increased attendance and higher prices at the Hong Kong Disneyland Resort. However, take a key look at this. Still, Disneyland Resort in California saw lower profits. On Tuesday, executives said the year-over-year decline was due to cost inflation, including higher labor expenses. They added that third quarter results for the Parks and Experiences business will also be weighed down by higher expenses and attendance normalization following a post-pandemic surge in demand. Attendance normalization just means, well, there was a lot of pent-up demand after the pandemic to go out and do things, but now that demand is kind of faltering, right? People have more options right now. They can travel. They don't have to necessarily stay in the United States to go places. They now are traveling internationally and doing what they were doing prior to the pandemic. So falling off a little bit, guys, that is not what you want to see for Disney. This just goes to show their pricing power has pretty much peaked, at least in their North American markets, guys. Very tough for them to raise prices on their parks while costs are increasing, and that just means decreasing margins. Not very good. Now, for the content sales, so content sales, think movies. Content sales, licensing, and other revenue, which includes box office, fell 40% in the quarter to 1.39 billion, as Disney didn't have any blockbuster movies in the quarter, guys. Disney noted that last year's quarter also included the benefit of ongoing performance of Avatar, which was released in December 22 and generated more than 2.3 billion in global box office sales. But still, guys, it's just unacceptable for a company like Disney that has so much power in the entertainment landscape that they cannot put out decent content on a relatively low budget, right? Think of Netflix. Netflix makes a lot of shows, guys, that cost them between $20 and $50 million. And between the advertising revenue and other revenues that they generate on those series, sometimes it's $200-300 million. Netflix is literally making 4, 5, 6x their cost of investment to make shows, and they're gaining that back. Disney is lucky to get back a 2x. If Disney spends $300 to $400 million on a movie, they're lucky to get $600 to $800 million in the box office, right? The risk to reward is just not the same for Netflix as it is for Disney. Disney has a higher operating cost, and they don't get the same amount of X's from the amount of effort that they put in. So all in all, guys, fairly mixed quarter for Disney, still on its road to recovery, and dare I say, guys, it's just not one of my favorite stocks. This company, guys, unfortunately is not the same company that it was back prior to the pandemic. They still have a long way to go to get back to there. Number one, they have currently still no dividend. Disney used to generate a ton of free cash flow back here and pay a very hefty dividend. They do not pay a dividend. I already showed you the EPS. EPS won't be back to 2019 levels much before 2026. And here again, guys, one of the major problems for Disney, right, after the pandemic, they have so much debt on their balance sheet, guys. So if you're thinking that they're going to do share repurchases or dividend increases soon, you are probably mistaken. They have a ton of debt to pay back, guys. And with the company not generating significant enough cash flow, all of the cash flow they do generate will most likely be going to debt pay down, which is what we've been seeing over the past 2 years, and that will continue. So unfortunately, Disney, guys, in my opinion, representing a little bit of a value trap. There are much better companies for the same valuations out there. I just showed you one that was at a 0.9 peg the other day, and that was Mercado Libre. And Mercado Libre has none of the same problems as Disney. I know they operate in two completely different markets, but just to show, guys, this stock, Mercado Libre, is off the all-time highs by about 15%, relatively close, right? It has a peg of 0.9. Disney currently has a peg of 0.9, but is still absolutely crushed from the all-time highs. So in terms of valuation, those two companies are the same valuation as an expression of their capacity to grow over the next 3 years, right? I would much rather go with Mercado Libre. Obviously, everybody is free to do what they want, but that is just how I see it. So revenue growth, 4.6% per year, EPS growth, 25% per year. But don't forget, guys, 25% may seem like a big number, but all they're trying to do, guys, is aggressively catch up to the company that they were in 2018 and 2019. So that gives them a 2024 forward PE at $105 right now of 22.3. And when we put them on a common denominator here, so we put that PE as an expression of the growth, it's about a 0.9. At a first glance, it does appear to be good value, but that's why I say, guys, it might just be a value trap. This company, they're all three of their lines of businesses are not doing as well as some people might lead you to believe, which is why, unfortunately for me, this company right now is a pass. There is much better investments in the market. That is just my humble opinion. All right, so that is pretty much it for Disney right now. And by the way, guys, I used to love this company. I used to invest in this company back in the good days of Disney, where it was a sure bet. But ever since the pandemic and what happened, guys, I really have not touched this company other than a few swing trades resulting from oversold conditions after big drops. But in terms of long-term investments, guys, it's just not one for me. So take from that what you will. Now, company number 2 we're going to be looking at is one of my favorite companies in the market right now, and that is going to be CELCIUS Holdings, the energy drink that is really putting some sticks in the wheels of Monster Beverage and Red Bull. They're growing very fast, and their margins are tremendous, especially for what the company does. So, company on earnings, CELCIUS Holdings had very good earnings, beat on EPS by 38%, massive beat, but they did have a slight little miss in revenue by about 8.8%. Pepsi actually said that was from their distribution deal with Pepsi. Pepsi as a whole slowed down on the quarter. And Celsius, being one of the brands that they distribute to the consumer, also slowed down slightly in the quarter, guys, but their growth is still absolutely fantastic if you ask me. So if you take a look at this growth here, guys, look at this growth curve of revenue expansion. The company is now profitable, has now been profitable for the past 5 quarters in a row. And this is one of a story that the EPS is growing tremendously fast. And the revenue is also expanding tremendously fast. And the company virtually has no costs, guys. They have no debt, and they only have about 350 employees. Compare that with Monster Beverage. Monster Beverage's market cap is like 3 times higher, right? This company trades at about a 17 billion market cap. Monster Beverage, last time I checked, was about 50 billion, so about 3 times bigger. Monster Beverage has over 5,000 employees. This company only has 378, so you can imagine the cost savings that this company has. They have no debt. You can see that best if I show you the balance sheet real quick. So they really have no debt either, right? Only pure cash and free cash flow. That's exactly what you want to see. Now let's take a look at some of the earnings headlines, guys, because they were very good. Celsius Holdings report first quarter 2024 financial results right here. Take a look at your sales trajectory for this company. Absolutely phenomenal. They crushed everything here, guys. Let me just blow this table up right here because that's all we get from the company. So revenue, 37% year over year. All right, Q1 2023 to Q1 2024. North America, 37%. International, although they only bring in $16 million from international, it is expanding, and I'll show you down below how quickly they are expanding and what markets they're attacking right now. Gross margin improvement. They now have gross margins of over 50%. That is phenomenal, guys, for a company making and shipping products. Absolutely phenomenal. Net income as well. Nice little bump here. This is the bottom line profit, so up to $78 million in operating in net income profits. That's up 89% year over year. Fantastic. Very good as a whole. Now let's take a look at what the CEO had to say and the CFO as well. Celsius reported its best first quarter ever, driving record revenue and contributing 47% of the quarterly year-over-year growth in the energy drink category. Our category share of 11.5%. This company is very young. They already have 11.5% of total market share. Very good. Reflects the early impact of shelf space gains that we are earning from company record and ongoing retailer resets, which we'll believe will serve as a flywheel for our continued growth. Celsius product innovation this year has delighted consumers with the most refreshing products we've ever created. Nice. Here's what the CFO had to say. Celsius's first quarter revenue of $356 million and year-over-year growth of 37% is a record, despite changes in days on hand inventory by our largest customer. They're referencing Pepsi. Our solid 51% first quarter gross margin reflects a balanced and disciplined approach to leveraging, so scaling up the business while simultaneously building the business and expanding globally, as well as an accelerated benefit from raw materials pricing and reduced freight costs. So as they get bigger, they get better and better deals from their suppliers. So international sales, 16.2 million. That's a 43% increase. Very good. We already went over the rest of the thing. So now let's get into some of the key factors I want to highlight for you guys. Celsius sales on Amazon increased 30% in the quarter compared to the prior year period. Celsius remained the #1 energy drink brand by dollar share on Amazon.com. This is the 4th quarter in a row that they are the #1 best-selling drink on Amazon, guys. They're beating Red Bull, they're beating Monster Beverage, they're beating everything else. That should be very notable to you guys. They're doing a great job at marketing their brand and using social media in the process as well. Now, international expansion. Take a key look at this. Sales in Canada began in the first quarter of 2024, so it's just recent, guys, and continue to exceed pre-launch expectations. Celsius's share in the energy category was 5.5%, which is very good. They're brand new and they already have 5.5% share of MULOC. This is basically a fancy way of saying grocery stores and convenience stores, corner stores and gas stations, right? So here's the furtherance of their international expansion. Celsius in the first quarter announced plans to expand its sales and distribution into Australia, France, Ireland, New Zealand, and the UK in 2024. Sales in the UK and Ireland began in April through the fitness channel and in select gyms. Sales in Australia, France, and New Zealand are expected to begin in the 4th quarter of this year, with broadening reach throughout 2025. So we can expect their dominance to continue, guys. All of this, them beating out Red Bull and Monster Beverage, they're doing all this while most of the revenue is coming from the United States. Just wait until they'll expand internationally, and I'm pretty sure these these numbers will only get better. So tremendous quarter for CELCIUS Beverage, right? Nothing bad to say about the company. They just continue doing what they've been doing, and it continues working, guys. So how does the valuation stand right now? Well, the valuation at $76, which is the price right now, that gives them a 2024 PE of 69. At a first glance, that appears high, but consider the fact that they're growing EPS at 30% per year, it gives them a peg of 2.3. 2.3 for a company that's growing so fast is really not that bad, guys. The area that I'm targeting is highlighted by this green box right now. Gorgeous monthly uptrend, just looking maybe for the monthly retest and run. If we can pick this one up, guys, $65 to $60, I will be adding to my bag of CELCIUS holdings. Company is looking absolutely fantastic. Not sure if we're going to get these levels, but these levels, guys, if you see them, could be a fantastic opportunity to build a very nice position in a very solid company. This company earlier in March was trading at almost $100. So the discount we're getting now is still fairly juicy at about 22.5%, looking very decent. Now, company number 3 we're going to be taking a look at is going to be RIVIAN. So we cover this one for a while on the channel. And let me just start this off by saying I really love RIVIAN as a brand, guys. I love their cars. They just have a cash flow problem. The company is obviously still net income negative. You can see that best expressed by here. They are growing revenue. That's fine. Growing revenue on a year-over-year basis, but they're just net income negative, guys. And unfortunately for them, their cash runway is thinning. Now, they do say that they should be profitable by the end of 2024. Right? And they are going to be increasing revenues all throughout that time as well, with really good ramps coming in 2026. So let's take a look at their earnings here real quick. So they missed on EPS by about 7.8%. That was actually sad to see, guys, because this is a company that's supposed to be improving its path to profitability. But this recent quarter, they had a few little hiccups where they spent a little bit more money than they should have. Revenue was fairly good, though, as their deliveries continue to advance forward by about 3%. The consumers, guys, largely do appreciate this brand. They like the car design. They like what the brand stands for. That is not the problem, guys. The problem is that it's very difficult to start a car company when interest rates right now are about 7, 8, 9%. It's difficult for the consumers to buy those cars at those financing rates. And it's also difficult for a company like RIVIAN to raise capital to continue its operations if it has to raise capital at 7, 8, 9%, guys. It's just not the same environment as when they created the company back in 2021 when interest rates were only 2, 3%, right? It's much easier getting multi-billion-dollar loans at 2, 3% back here than it is getting those same loans at 7, 8, 9% down here. You must agree with that, right? So, bit of a recap here. Positive consumer sentiment, expenses coming down, but still negative margin, free cash flow margin as well. Interest rates, we just talked about that. Cash runway thinning, we'll take a glimpse into that. And the timing of their IPO, which we just discussed here about the interest rate timing, right? So let's take a look at some of the article. RIVIAN reports mixed Q1 results, but trims CapEx forecast and sees Q4 gross profit. So a little bit of a mixed bag here. They missed this quarter, but they said they'll be able to do a little bit better in terms of cost savings in the upcoming quarter. Excuse me. RIVIAN reported mixed quarterly results for the first quarter, but we'll see further cost savings from shifting its upcoming R2 production to its Normal, Illinois plant and trimming its capital expenditure forecast. The EV maker also reaffirmed its full-year loss forecast and still sees a path to modest growth profit in the fourth quarter of this year. For the quarter, RIVIAN reported $1.204 billion versus the $1.175 billion, so they beat on revenue, 80% jump from a year ago, very, very good, but they missed on the EPS, 1.45 loss versus the 1.27 loss. That was the unfortunate part of it, right? So RIVIAN have reaffirmed its adjusted EBITDA loss forecast of $2.7 billion for 2024, but now sees its capital expenditure outlays improving to $1.2 billion from $1.75 billion. So 2.7 plus 1.2 means they'll burn an additional $3.9 billion will be burned this year. They only have about $5.8 billion in cash on hand. So literally leaves them about 3 quarters before they run out of money, but the company says they will be profitable before they run out of money. Remains to be seen if that will actually manifest, right? So we hit several milestones in the quarter, including producing our 100,000th vehicle. Very, very good. Successfully navigating the retooling upgrade. They retooled a few of their factories to make production more efficient. That went well, apparently. And unveiling our new mid-size platform which underpins the R2, R3, and R3X. We showed those last time we went over the RIVIAN earnings. They're brand new models, right? So by shifting R2 production to its existing US factory instead of its upcoming Georgia factory, they halted the construction of the Georgia factory, reallocating production to the Illinois one. That will save them $2.25 billion. That gives them an extra quarter of runway. Very, very good decision by the company. So all in all, guys, in terms of the cash cushion, Rivian said it had $5.98 billion at the end of Q1 versus the $7.86 it had at the end of last quarter. Part of bringing down those costs came in the form of a 10% salaried staff reduction, with the company citing economic uncertainty. So company doing a couple good things. Halting the construction of the Georgia plant, that reduces capital expenditures, reallocating production of vehicles to the Illinois facility, which is already built and operational, that saves even more money. And third, they laid off a bunch of people. So the company's trying their best, guys, to save money where they can. However, they still lose about $38,000 on every vehicle they produce. So let's take a look at some of the highlights. They are the best-selling EV in the US, over $70,000. Very, very good. 5.1% market share in US EVs in the first quarter. That's a very good increase as well. Now let's take a look at some of the further headlines, guys. We're not going to spend too much time on this, but just to show, Rivian produced almost 14,000 vehicles, delivered 13,500 of those. Those are very, very good. These results exceed our outlook and help us establish a strong foundation for the remainder of the year. That was very good. Now, Amazon and Rivian remain focused on bringing 100,000 Rivian electric vans on the road, which will help Amazon save millions of metric tons of carbon per year. That is such a big contract for Rivian, guys. I think, if I'm not mistaken, Rivian has only delivered about 15 or 20,000 of those vans, so still a lot of them to be delivered to Amazon. Now, a few more of the highlights here. Drive towards profitability. First quarter of 2024, gross profit per vehicle was negative $39,000. Still a long way to go before being net profitable on every vehicle they produce, such as companies like Tesla, but they are moving in the right direction, guys. At this point last year, they were losing over $100,000 per vehicle. So at least they're improving greatly, right? Where they can, at least. Now, a couple little highlights here as well. In terms of charging, so during the first quarter of 2024, we made notable progress improving the experience of owning a Rivian by growing the Rivian Adventure Network, their charging network, and enabling access to over 15,000 Tesla superchargers. That's very good. Now, why do they want to expand their supercharger network? Well, here's something that I didn't know as well. It allows Rivian to meet one of the key requirements to apply to access the $7.5 billion in available government grants associated with expanding domestically manufactured fast chargers across the country. If they could get such a big grant, guys, it would obviously it would take a lot of heat off their shoulders, a lot of weight off their shoulders, right? And allow them to have a bit more cash if ever they're not able to meet the end of year runway by the time they say they're going to be profitable. At least if they get an extra $7.5 billion from the government, it extends that runway a little bit longer for the company. So all in all, guys, decent quarter for the company, not gonna lie. Yes, some numbers came in lighter than expected, but they are trying to save costs where they can. I still like this brand. It's not, as I said for Tesla, guys, it's not a Rivian problem, right? The cars are very good. It's just an overall auto industry slowdown. And unfortunately, Rivian is just caught in that mix right now. In terms of the fundamentals, guys, I mean, since their net income negative, I can't really do much in terms of price to earnings ratio or price to free cash flow, stuff like that. We'll just have to take raw price to sales. Currently, guys, they sit at a market cap, in the after hours, I believe they're down right now to about 9.63. So that'll give them a market cap of literally about 9.63 since it's almost the share price, 9.63 billion. And as of this current year, they're supposed to give out a earnings projection here in terms of revenue, of about 4.83 billion, right? So let's just call it a 2-to-1 price to sales. That's actually not that bad for the company. If I can maybe find Rivian shares down in the $9 range, once again, $9, $8, I may just be tempted to make a swing trade on this company as a whole. I do want to give them a chance, but as I said, guys, it's just not the perfect environment for automakers as a whole, but could be a very juicy opportunity, guys. The company is currently trying to become profitable, and we're arguably approaching the bottom of the cyclicality of the auto industry as a whole, right? So it could be the time, if you do like the company, this would pretty much be now or never if you do want to make a swing trade on it, and if we are to see the bullish narrative for the company play off. So hopefully that was helpful for everybody, guys. Now that we're through the earnings, let us go through quickly our technical analysis. Give me a quick second. Once again, apologize that I sound a bit congested here, guys. Hope it's not too bad. But anyways, let's go through the SPY, right? So SPY, nothing much has changed. Still look, just watching this daily uptrend right now. After we've recaptured this, the bulls have done a great job recapturing the daily uptrend. Now we need to simply look when this move tops out, right? That would be synonymous with a loss of the hourly time frame. So keep an eye, 12 EMA has been the guide so far. If we lose this hourly time frame, your daily consolidation is underway. Then we're just looking for a daily higher low, anything above 499.75. Daily higher low for further trend continuation. Now, where can they set the daily higher low? Probably around this green box. Not only this green box, big horizontal support that acted in the past, guys, but all of your major moving averages are there as well. It would be a very nice situation if the bulls can just tap this and then be sent further, guys. As a whole, very in control of the daily uptrend right now. And as we were saying, guys, this weekly push is getting better and better as the days goes on. The weekly bulls have now recaptured 78, almost 80% of the move, sets them up beautifully to eventually change this back into a weekly uptrend that we had lost after losing these lows. So looking fairly good on the SPY. Let's keep going. Now, in terms of the QQQs, largely the same analysis as the SPY. They're tracking each other fairly in a parallel fashion right now, right? So nice daily uptrend by QQQ as well. And we are now above this big area of previous support, which then became resistance, and now above our moving averages. So same logic applies. As soon as this move tops out, just looking for a daily higher low, anything above 420.5, looking for that daily higher low for further trend continuation. Watch this area right here, guys, 433 horizontal support, and your moving averages are there as well. So we could just see something like this manifest for the bulls. In terms of your weekly trend recovery, well, we were in a weekly downtrend, and now the bulls have put in a heck of a bounce. The size of the bounce is very, very juicy at this point, guys. Over 80% bounce right now sets up the bulls very nicely to two-step recover this potential weekly uptrend. That is if they don't completely V-shape it first, right? So all in all, the bulls are looking very healthy, guys. Fully in control of this daily timeframes. I like the size of the weekly bounce. Now what we have to see them convert on the weekly, and then all of your timeframes will be once again lined up, right? We'll still be in a monthly uptrend. At that point, we'll recapture the weekly uptrend. And if we recapture the weekly, it stands to argue that we would at the same time be in a daily uptrend. Then you would have all of your long-term timeframes showing confluence, and we would have a lot more certainty as to the direction of the market over the next month. Moving into financials now. Financials finally putting a little bit of recovery, guys. They finally set the daily uptrend. Let's go financials, right? So daily downtrend, nice little move up by the bulls, excuse me. Daily higher low is set, and now we broke to a higher high. It's not the best higher high, but they did put it in. So daily uptrend is started anew right now. Any move lower, just going to be looking for a daily higher low, anything above 40.2. Probably for the daily higher low for trend continuation at that point. In terms of the weekly also looking fairly decent too, right? If we can break last week's high and close above it, that would be a new weekly uptrend for the bulls and would put them back in short-term control of the weekly as well and put us on to that next leg of upside on the monthly. Looking very good for financials. Just need to see them break above this area. If we can get one more day of green, that should really create enough space to then use this area for a potential pullback. And then maybe that would line up with your moving averages curling up into this location as well. So looking fairly decent on financials. Great recovery by them. Moving into healthcare right now. So healthcare finally breaking out, guys. This is the breakout that I was looking for the past couple of days, right? So coiling sideways, and then we get the break. The break really largely due to the rest of the market being overall healthy, because at a first glance, guys, this bounce on the weekly was so weak that if the markets would have continued dropping off of fear of inflation or geopolitical tensions, this bear flag would have most likely just simply flushed. But as of now, the bulls saved it. So daily uptrend started anew. Any pullback at this point going to be for a higher low, anything above 139.64. Looking for the daily higher low for further trend continuation. What I like to see from healthcare bulls right now, give me one extra day up here, create enough space that then we can use this area of support with this green box and the moving averages as support, get that daily uptrend with some further legs because we need to recapture more of this weekly move, guys. Weekly downtrend, we're always expecting a lower high, but it all depends, where will the lower high be? Will it be here? Will it be all the way up here? Obviously, if we get all the way up here, it sets up the bulls nicely to be able to recapture this weekly uptrend, right? As of now, the job is not done. They have only recaptured about 40% of the move. I need to see them come up at least to about 144.50, 145 to really give themselves the space needed to reset this into a weekly uptrend down the road, but a good first start by our healthcare bulls. Now, moving on to semiconductor semiconductors. Semiconductors not doing too bad at all today, even though they were red on the day, just a healthy pullback. We mentioned this in yesterday's video, right? As soon as this move topped out, looking for the daily higher low. How do you know the move tops out? Well, it's a loss of the hourly trend, right? Flushing these lows, you can see hesitation, and then the lower lows into the end of the day. So if this consolidation continues into tomorrow, no big deal, guys. We have a lot of space. Anything above 206.31, just looking for the daily higher low for potential further trend continuation. Now, below us, a few key areas of support we have to watch. 216 down to 212 should provide the bulls with some good support. And we also have the confluence of all your moving averages are right there. They're all bunched up, but now you can see them if I zoom in, right? They are looking very good. The bulls looking fairly decent. And on the weekly, pretty much same picture as the rest of your indexes. This weekly bounce is getting fairly juicy here, guys, right? We're talking about a recapture of about 78.2%. So at the same time, if we get a bit of daily consolidation, something like this, maybe even sideways, right? Well, we could just getting some weekly higher lows in place and reset this weekly uptrend. And this, if we get 2 weeks of consolidation, the third week is NVIDIA earnings. So could we see something like this? Very possible. We'll take it one day at a time as usual, guys. Don't want to start predicting things 3 weeks out, right? Now moving on to IWM Russell. IWM Russell benefiting from a very nice day of upside today as well. And that's largely because your yields have been steadily coming down ever since that meeting with Jerome Powell. Big drop in the 20-year yield, big drop in the 10-year yield as well. So now you do have a little bit more favor coming into growth plays. So nice daily uptrend. Any move lower at this point when this move tops out, just looking similar to the other indexes, looking for the daily higher low for further trend continuation. They've done a great job of getting above our red box of resistance. Huge area of congestion in the past 2.5 years. We're now back above it. So stands to argue if we come back into it, should be able to use it as support. All of our moving averages are here as well, curling to the upside. So this level right here, 201, 200 could be a cheeky little spot for a little bit of a swing trade here, guys, for that Russell momentum to the upside. In terms of the weekly bounce is fairly decent. I'll remind you, we had lost the weekly uptrend by flushing your higher lows right there. And now the bulls have to get it back. So the size of this bounce has been fairly decent so far. Talking about a bounce almost 75%. So that is very good. I'll give that to them. So any extended consolidation on the weekly, just looking for that weekly higher low for further trend continuation. So looking very good across most indexes, guys. And now lastly, your Dow Jones. So the Dow Jones not looking too bad either. Daily uptrend simply continues. Same logic as the rest. As soon as this move tops out, looking for that daily higher low for further trend continuation. And the Dow Jones, I don't even probably have to say anything to you guys. You guys know the drill, right? Very easy. Pull back. This is your area of support, right? 38,500. Your moving averages are there as well. Going to provide a decent location for the bulls for the bounce attempt here to push this daily uptrend even higher. On the weekly size of the bounce is getting quite noteworthy at this point. Not quite as good as the rest, only up about 618% of the move. So a decent bounce, but not a 75% plus bounce, right? So pretty decent. We create a lot of space. If for whatever which reason, guys, we lose this daily uptrend into a daily downtrend once again and start retesting these lower areas, well, the bulls need to set the weekly higher lows and get this trend back in their favor because they obviously lost that uptrend right here when we flushed these lows. Now it's up to the bulls to either V-shape this or make the two-step recovery process. That's what I'm looking out for on the Dow Jones. Now, guys, let's move into crypto a little bit. Going to go over these quickly because not much has changed, but I figure I should do an update at least once every 2 days, even if things are the same. So daily downtrend on Bitcoin simply continues. They had a nice engulfing move, and now we're trying to set the daily higher low for the daily trend change. That is what we're monitoring for the bulls. If they give it all back and roll over to these lows, you can just expect, unfortunately, daily downtrend to continue and the weekly downtrend to continue as well. However, the shape of these wicks leads me to believe that the lower 60,000, 59.58 is an area that the bulls don't want to lose just yet. So at least I am expecting them to make one trend change attempt, but they will have to do a lot better than this, guys. They'll have to get up pretty much to above 66,700. That will be a nice daily trend change. And then, and only then, can we start to look at the size of the weekly bounce, right? Because as of now, we are in a weekly downtrend, right? Lows, lower highs, lower lows. So now it's up to the bulls to reverse this into a new weekly uptrend. That can take some time. As of now, though, bulls on Bitcoin trying to fill step number one. Give me that daily uptrend, and then we can talk about the weekly, and then we can talk about your monthly continuation as well. It all starts on the daily, guys. Moving on to Ethereum as well, same analysis as Bitcoin, right? So you can see, obviously, loss of this. We had a little bit of a daily uptrend here, lost it, and now the bear setting the lower high. The bulls have to protect these lower lows right here, guys. That's pretty much 2,800, right? 2,850-ish, let's call it right here. Have to protect these lows. Would not want to see them lose this. If not, we just perpetuate this daily downtrend, perpetuate the weekly downtrend as well on Ethereum, and just head into further and further monthly consolidation. The epitome of which I do believe, guys, that at worst case scenario, 2,400 is maybe where we're heading. I'm not saying we're going to go there. I'm just saying worst case. If it does happen, that's probably where we stop, and I will be putting my money where my mouth is. If we do come here, guys, I will be buying a little sizable portion of Ethereum as well. So as of now, bulls still need to do step number one. Give me a higher low, higher high. Give me this daily uptrend back. Once we get the daily uptrend back, then we can look to the weekly for an engulfing move. But it all starts on this daily. As of now, the bears in full short-term control of your daily, short-term control of your weekly time frame as well. Now, let's move into Apple. Excuse me, guys. Give me a quick second. All right, so moving into our big tech names. So Apple still just consolidating sideways after earnings, right? Really no movement on Apple. Still in the context of this gorgeous daily uptrend. Still just looking for the daily higher low for potential trend continuation. Now, if ever Apple does one of two things, guys, if we break yesterday's low, that would be a daily downtrend, but it's not that big of a deal. Daily downtrend for Apple would just be weekly consolidation. But on the weekly, we had a weekly downtrend, clear as day, and now we have an engulfing weekly move. So we're just looking to set the weekly higher low. And look, if I zoom in, you'll see what's down here, guys. All of your major moving averages. Not only is this a heck of an area of previous resistance, it used to be support back here, right? That's the 180 to about 178. Not only do we have this in terms of horizontal support, but we also have all of our weekly moving averages there as for Apple as well. So can we see something like this, weekly higher low, and then weekly uptrend? Very, very likely. That's why I am going for that specific trade on Apple. If we do continue visiting these lower areas, I'm going to try to pick up some Apple shares down here and swing them higher. So all in all, looking very good. Still consolidation for Apple. And obviously to the flip side, guys, well, I mean, if we break 187 to the upside, your daily uptrend simply continues, your weekly expansion simply continues, and then we'll be looking to set the weekly higher low somewhere from here, something like this, something like that, right? So those are the two scenarios I potentially see for Apple. All in all, great buying opportunity if we revisit the high 170s. Moving on to AMD right now. AMD also struggling a little bit today, 0.87%, but you know, that's kind of what we were expecting, right? We were coming up into this big area of resistance. That's the 164 to 158. It was the area that AMD used as support for a very long time back here, and was also your prior all-time highs as well. So a very challenging area for the company right now. In terms of the daily, guys, well, the bulls have put in somewhat of a decent bounce, right? The daily downtrend should be pretty much clear as day, right? And what the bulls need to do right now, need to get a daily uptrend going. Now, the size of this bounce was a fairly decent bounce, got as high as about 78.2. That does give them a very good chance at resetting this daily uptrend. But until they do it, guys, right? Until they do it and get back above this resistance, I would not say that AMD is out of the woods just yet. And only if that happens, guys, then we can look at how much of this weekly move we can recapture to reset the weekly uptrend. It all starts on the daily. And obviously, guys, to the downside, if we get further follow through to the downside, I still do believe that this area, 140 down to 130, does represent a very decent area for a little bit of a swing trade. It is previous resistance, guys, and that would put AMD from their highs of the year, that would put them down 37 all the way to a 42% discount. That would be a likely area where I'm going to be looking to make a swing trade on AMD. It is also the location that I'm targeting for the longer term monthly higher low for further trend continuation. Your 12 monthly EMA is right there as well. So a lot of good confluence down here in the 140s, 130s, and the valuation down there makes a lot more sense, right? If you take, let's say, another 10%, right? From 148, it's about $14. If they go down to about 135, 134, that would give them a PEG ratio of roughly 1.05, fairly juicy valuation. A lot better valuation down here than up here, that's for sure. Now moving on to Amazon. So Amazon looking fairly decent on the day, flat day for Amazon. Amazon really just chilling here, right? So daily uptrend clear as day. As soon as this daily moves up, ceases, we're just going to be looking for that daily higher low for further trend continuation. Look for your common areas, guys. Previous highs right here, those were resistance, should now be acting as support. That's your 183, and your moving averages are there as well. So just going to be looking for that daily higher low for further trend continuation. As long as as the bulls are in control, that is the pattern we are looking for. In terms of the weekly, guys, I mean, no red flags on this weekly chart, right? Very healthy weekly uptrend currently on Amazon, defending the 12 EMA on the weekly as best as it can, and currently into monthly trend expansion right now, looking very, very good, really starting to get close to eclipse our all-time highs. We're still not really above this area right now, 188, 189. Anything beyond a 190 handle will be a clean break of all your previous all-time highs. Looking forward for Amazon to do that. Very good quarterly earnings recently. No red flags for the company. I begin to get interested in trading Amazon if we do revisit the mid 170s. I don't know if they're going to get there, guys. All I know for sure is I did buy these dips when they were occurring, so very happy to have those, and congratulations to all of you if you did as well. Now moving into Google. Google up 1.85%, doing very, very good. So after their earnings, always looking for the daily higher low for further trend continuation, right? So looking very good. Nothing bad to say on Google as well. Just everything going as planned, targeting the 176.31. Now, if ever we set the lower high and set a lower low for some reason on Google, right? That would be a daily downtrend. At that point, we would be targeting 160.85. Previous resistance, it should now be acting as support. And we do have a few moving averages down here as well, namely the 26, which has been holding up fairly good this entire time. And if we do get, for some which reason, guys, if we get that daily downtrend, zoom out to the weekly, all you'll be looking for is a weekly higher low, anything pretty much above 132, just looking for that weekly higher low for further trend continuation. Google with tons of space. Valuation up here is not that bad if you want to ask me, right? 1.85 at 177. We're under that now. So fairly decent valuation as well. I see no red flags for the business. If we do revisit this lower 160 area, that is where I will be going very, very hard on Google. Now moving into Meta. Meta continues their recovery after earnings, so continuing this beautiful daily uptrend, coming into our moving averages as resistance and coming up to a big level right now, right? That 482 level, huge area of prior support. So it's going to be tough for the bulls to really get cleanly above this. We may just get a little bit of rejection, coming to set the daily higher low and make another attempt at it, right? So daily uptrend, soon as this move tops out, looking for the daily higher low, anything above 427.50, daily higher low, to try and attack this zone a little bit more. In terms of our weekly bounce, the weekly bounce is getting there, but not quite fully there, right? Not even about 50% of the move. I would really need to see them pull up into that resistance, the 482 I was talking about. If we can really get up into that 482 region, it's going to be a sizable enough bounce on the weekly that the likely scenario will probably become new weekly higher low into higher high and really reset this back into a weekly uptrend after having lost the uptrend, right, with this big weekly down, leg down that we had after earnings. So looking fairly good on Meta. Congratulations to everybody who bought the recovery dip. As I was saying, guys, it was a screaming buying opportunity because their earnings were almost perfect, dare I say, and their valuation is very cheap down there and still continues to be cheap even at 460 in my opinion. Now moving on to Microsoft. Microsoft not looking too bad today, down 1%, but not looking too bad, right? They did have a lot of space. What Microsoft is looking to do, well, we had the daily downtrend. The bulls put in a 100% engulfing move. We got stopped out here at the top end of our prior range of resistance, right? That 415 area, but that's okay. Anything above 389.69, looking for that daily higher low to get the daily trend change, right? That's what we're looking out for on Microsoft. If we revisit this lower range right here, 400 could be a little bit of a short put play if you have the capital. Short puts pretty much in the 385 range below here. That should be a very, very easy trade for a lot of people. So something like this is what I'm looking for right now to be able to break this upside resistance and really get back to our weekly uptrending mode, right? So Microsoft still has a little bit of work to do, but not looking too bad at all. Created a lot of space off these lows. Remains to be seen, can they reset the daily uptrend? And if for whatever which reason, I would be very surprised, but if Microsoft engulfs this to the downside and goes lower, well, you guys know my key zones, guys. 375 all the way down to 365. This is the area that I really want to pick up some Microsoft in. Now moving on to Netflix. Give me a quick second. Sorry, I'm drinking so much. It's to keep my throat from drying out. So moving on to Netflix right now. So Netflix did something good today, 1.5% to the upside, but what they did today, guys, is they broke through a key area of resistance that was acting as resistance for the stock in the past, right? This area right here, the 600 level, we are now clearly above it, 606. And this is kind of like Meta, right? Big after earnings recovery story. Now pretty much entirely filling that gap from after earnings, clearly above all our moving averages right now too. So if ever this move tops out soon, what we're going to be looking for is the daily higher low, anything above 544, daily higher low for further trend continuation. And in setting that higher low, we have a lot of moving averages down here, so likely to be able to protect this area. And then we also have our very big 575. This 575 level was so key, not only in those two locations, but also all the way back, all the way here. Now that we're above it, we should be able to use it as support coming if we do pull back into it. Now, in terms of the weekly, guys, weekly bounce is looking fairly juicy as well. So loss of the weekly uptrend, clear as day, right? Now, how much of the move have they taken back? 61.8%. They're now getting into the levels that we can say that the probabilities favor the bulls to either V-shape this or at least put in the two-step weekly uptrend recovery process. Looking very good on Netflix. Nothing bad to say about the company at all. Moving on to NVIDIA right now. NVIDIA also looking very decent despite losing 1.72% today. That's fine. They've created a ton of space. Daily uptrend right now, clear as day, and just looking to set that daily higher low, right? Loss of the hourly trend, as you saw in today's trading, just goes to show that we're in a bit of daily consolidation. No harm, no foul there, right? It's perfectly normal. Anything above 815, just looking for that daily higher low for the trend continuation. Now, keep in mind a few key levels. I don't know if you could see this. Maybe I should make it a little bit bigger. That 850 line, 850, huge prior area of horizontal support. That can be acting as defense for the bulls. And we have all of our moving averages below us right now. That could also be acting as a nice little pullback area before putting in an extra leg higher. NVIDIA looking very good. On the weekly as well, I mean, this weekly trend was never in jeopardy of being lost, but just to say, guys, we were always looking for the weekly higher low for weekly trend continuation. Quarterly earnings for NVIDIA, Monday, the 20th of May. So in 2 Mondays from now, it's quickly approaching maybe only call it about 10 trading days until then. So not that much time, right? You'll see 2 more weekly candles on NVIDIA. Hopefully they can get us as close as possible to the all-time highs prior to those earnings. Would look very, very good for just continued trend expansion after those earnings. So nothing bad to say about the company. If we do it's very tough for me to play even options on NVIDIA, guys, because they are very expensive, right? I really need a tremendous discount. If for some which reason after earnings, like let's say the play that I'm looking for NVIDIA maybe, it's going to be something like this. Pull up into earnings like this. Then if for every reason we get a negative reaction, sending us lower, tapping into this big support zone, that's when I'll take this swing trade for the future upside. But taking it here, guys, I need a juice. I should have taken it back here. I didn't. That's my fault. So now the next trade opportunity was the one I just described. Now moving on to Tesla. Tesla coming down about almost 4% today. So not the best day for them. Can't lose the 176.30. If they lose the 176.30 here, guys, daily downtrend will be in motion. Now, we do have good support down here. The moving averages are here. We obviously know that this whole green box down to 170, arguably all the way down to 165 even. A lot of good support areas down here too, right? So this daily downtrend, not too big of a deal. Why? Because on the weekly, they've created so much space after those earnings, just looking for a weekly higher low. So the entire time, if we were going to be in a daily downtrend, need the bulls to set that weekly higher low. That would look something like this, right? Daily downtrend. And then when you see the daily uptrend recapture, that's when you know your weekly higher low is set and you're looking for that potential weekly leg higher, right? So that is the type of scenario I'm looking out for on Tesla. Obviously, you don't want to see the bulls lose too much of this because then that entire earnings move that they've done kind of just falls apart, right? So really looking for the 170, 165 area to be the last stop for Tesla. Obviously, the bulls can just reverse this if we have good rest of the week for Tesla and we mount a close above. Daily uptrend will be recaptured by the bulls and we just simply continue this weekly move higher, right? Well, this weekly candle is not done, so that weekly candle would probably look green and we would just be in further weekly push up from the bulls. Eventually, though, we do need to set the weekly higher low and into a weekly uptrend. Maybe we're in the process of doing that now. That's why I'm keeping a close watch on these levels down here. All right. Excuse me. Now moving on to Palantir. So Palantir not looking too bad at all today, despite coming down 15%. The reason I say not looking too bad at all, despite losing 15%, guys, is we're still holding a very juicy area of support. This, in my opinion, is a buying opportunity. We've come back into our zone, the zone that we love testing and love using as prior support, previous resistance as well. So it now should be acting as support, guys. This thesis has not changed. Their earnings, we covered them yesterday on the channel. Their earnings were very good. Nothing to be worried about, in my opinion. However, what the bulls need to do is start everything from scratch. It was a daily uptrend. Now, unfortunately, we have engulfed the entire move. So now the bulls will need to find a bottom eventually. How do you know that earnings have bottom? Need to see a recapture of the hourly uptrend. You see that? Your daily bounce is going to be underway, and then they have to reset the daily uptrend all over again. So what I'd like to see from the bulls on their daily trend change attempt is get me back above these moving averages that are above us right now, 2250, and this big area of resistance, 23. If we can mount back above that, it sets up the bulls really nicely to be able to two-step recovery these earnings that we just had yesterday. If not, if we continue bottoming out in this area, I simply reiterate, $20 to $19 is my optimal buy zone for Palantir. At that point, we are still just looking for the monthly higher low for further trend continuation. Everything is very fine with Palantir, guys. The one thing that we may stand a chance of undoing if we lose these lows is this gorgeous weekly move that we were trying to recapture, right? Engulf this guy right here, engulf, reset the weekly into a weekly uptrend. So far, we haven't lost that capacity, but it's definitely not looking good. The bulls really need to stop the bleeding soon. Now moving on to PayPal. PayPal also not looking too bad today, up about 0.5%. PayPal's still just consolidating sideways, right? So PayPal always does this, where it moves up aggressively, then just consolidates sideways. You can see that all the time. It did it a bunch back here, up, sideways, up, sideways, up, sideways, right? It just can't go on these extended rallies, up, sideways. This was one of the better rallies we've seen, but now, guys, unfortunately, just sideways action again. So daily downtrend, if you want to be technically correct right now. So we're just looking for the bulls to protect this right now, 64.77. Lose that, daily downtrend simply continues. And we then look to our weekly levels to be our salvation on PayPal, right? PayPal trying to maintain its formation of a weekly uptrend right now, but it's not looking too good. I would not be surprised, guys, if PayPal just simply continues to consolidate. The earnings were decent, but it really wasn't anything to scream home about, guys. Really still a period of transition for PayPal as they look to grow their business more, get back to the old growth rates that they had prior to the pandemic, get back to high free cash flow, higher net margins. So far, they're just not delivering. So PayPal just may get stuck in this area for another quarter, guys, unless the market really goes on a tear and lifts PayPal through this huge area of resistance. If that happens, if we get through 68, then the next stop, in my opinion, will be that 75, because there's really not much else in our way before that 75 level. So PayPal, you know, not looking great, but not looking terrible either. Kind of just in between, right? My favorite spot to be buying PayPal. If we, for some reason, come back below 63 to 61, I will maybe revisit this trade. Now, that's pretty much everything I had for you guys in terms of stocks. Let's go over the trades that I made in my portfolio very quickly. All right, guys, so taking a look at the portfolio, our earnings strategy simply continues. Everything yesterday pretty much went very, very well. We only take one simple loss, and that was on Disney. So let me go through yesterday's trades. You guys obviously know we had the CELH 62s and 63s, stock in at above 70. That was fine. Crocs reported earnings as well, ending well above our 103. We were able to close those pretty much for worthless too. Datadog as well, even though they had an 8% drop in the after hours today, they were trading around 110, able to close those for pretty much worthless as well. Disney 104s as well. So the Disney's, guys, is the only loss that I took. So take a look here, guys. I have the trades for you. You can see that. Well, I mean, I prepared a notepad as well, so let me just go through that first, right? Here is pretty much all of the realized premium for the day for all of these trades, right? So before, let me just get my ideas in order right here, okay? So all of these positions that we closed, the CLHs, the Crocs, Datadog, Disney, Microchip, Ferrari right here, and SYM, okay? All of those hit except for Disney. And the realized profits are right here. Here's how much money I got getting into the trade, and here's how much I closed them for. Everything was in profit. Ferrari came a little bit close. I was telling you guys that was the one that I was most nervous about, and Disney was actually a loss, right? So coming very close to my strike, did not want to hold it through the end of the week. Going to take that $10,000. take a little $40 loss here, but take the $10,400 in capital and just move it into a next earnings play, right? Just move on, guys. I was expecting a Disney for either coming in line, or if they were to miss by a little bit, was not expecting to go down 9-10%. That is just the luck of the draw, I guess. So very happy to be out of this one with only a $40 loss. You can see those trades right here. So just so you guys can see that I'm not finessing anything, right? I show you guys all the wins, all the losses, everything, right? So here is pretty much all the trades that we opened yesterday. Feel free to pause the screen. You'll see that all the premiums line up with exactly what I have on my spreadsheet right here. And the loss pretty much was Disney, right? So Disney we wrote for about 25 cents. Ferrari we wrote yesterday for 240. Ferrari came down a lot. We were able to close these at a profit. I was getting nervous, guys, because Ferrari was coming down fairly quickly, and 400 strike is $40,000 in capital exposure. So when the company was kind of trading in the early morning right here, saw a big dip, the stock then opened right around here, around the 930 mark, right? You can see we took that, we closed this position at 937, didn't want to take the chance, and actually very good. I could have closed for a little bit more profit if I would have waited maybe 10 more minutes. We could have maybe gotten an extra $20, $30 out of this one, but I was happy with it. We took $90, no more risk of being assigned, and we just ran with it, right? So that was a win on Ferrari. Happy about that. And the rest of the closes are up here. You can see Disney was the one we closed at 65 cents. So we got 25 cents, closed it at premium, closed it at bought back at 65. So the loss is $40 on that position. But all in all, guys, fairly good day. You can see that we did realize $245 yesterday, and that is not counting. I didn't count the premium, the $200 we made on the SoFi calls for Friday. I did not count the $51 we're making for that Apple wheel trade that we currently have right here as well. I did not count the Palantir trades as well, which is about $120, which also is still running. You can see those trades are still indeed live right here, right? So actually a lot more for Palantir. This should be significantly higher for Palantir here. The 22 should be about $160. So all of this money, I'm not counting. This is only the earnings realized trades that we did yesterday. So fairly good day. Can't complain at all, guys. Now, which ones do we have on deck for tomorrow? Well, SoFi, those are staying put, covered calls. Palantir, those are staying put for the week. Really don't want to close those. I like those levels on Palantir, so we'll deal with it if we get a sign. Shopify, we have Shopify earnings. They're coming up tomorrow. So we wrote these 65 puts. Fairly good level on Shopify, if you ask me. This was the area prior in the last couple of weeks when I was doing my top 5 options plays. 65 is really like right in my sweet spot. As a matter of fact, very close to the 200 weekly moving average. This green line here that you can barely see because the box is green, that is where I'm going on Shopify. And that is a heck of a move down, guys. That would be a move to the downside of roughly 15%. The expected move on Shopify, if I'm not mistaken, if I remember before the close, was about 8%. So we'll see how they do. They report earnings tomorrow before the bell. You can see, guys, that I'm writing 2 times the expected move, roughly, right? Expected move, it came up when I wrote these, it was about 8%. So I guess we'll just have to take my word for it. These do change a little bit in the after hours. So the expected move, we went with the 65s, and 65 is also a good area. Previous resistance, good support. So I kind of try to time 2 times standard deviation with a support area. That's how I try to take those trades. Now, we also wrote the Uber 62s for tomorrow, also for earnings. We wrote 3 contracts of those, got 26 cents a pop. Very, very happy with those premiums as a whole. And I like Uber. Uber's a very profitable company now, growing excessively fast. You can see the expected move, stock closing at about 70.43. Expected move, 63.54 to the downside. Now, it was actually lower than that, but obviously it moved, guys. These little squiggly lines that you see right here, is it moving? The expected move was actually $65. So it was a $5 for 1 standard deviation. 2 times that would be $10 move to the downside. And that's exactly pretty much where we went with this trade on Uber. We went with the 62s, Uber on the 62s. Fairly decent location here, guys, right? 62 would be right about all the way down here in our only previous area of support. So we will take our chances on Uber if it does come down there, guys. Still, guys, that would be a 12-13% drop on Uber, and I'm really not expecting anything bad from them. If anything, they actually guided for a good quarter. So it remains to be seen how we move with that stock as well. My max drawdown on this would probably be, these resistance areas, right? Currently start 62 down to about $56. So we'll see how that one goes. Now, moving on to Apple, that one we still hold. We got that yesterday, no secret there. We have ANET. ANET actually came out with earnings in the after hours. So ANET, same rule applied, 232.50. They already moved in the after hours, but look, ANET, I went very conservative with this one, guys, right? So ANET prior to their earnings was about 274. We went with the 232s. 232s would be right about here. 15% to the downside. That would be your 50 EMA tag and this little area of previous support right back here. Right, just going to be targeting the monthly high or low. That 12 EMA on the monthly is also roughly 230, 232-ish. So a little bit of confluence down here. And that was really twice the expected move. ANET was supposed to move about 8, 9%, and I went 15% lower. And in the after hours, they did very good, guys. They're up to about 292. So we'll be collecting all of that profit by tomorrow morning. Very decent trade there. We also have Toyota Motors. Toyota Motors, May 17th, their monthly contracts. They don't have weeklies. We went with the 210s. We got about 46 cents for those. ANET, we got 64 cents. Sorry for not mentioning it. So Toyota Motors, we went with the 210s. Toyota Motors, same thing, pretty much went for 2 times the standard deviation, right? So the expected move on Toyota was about 5% up or down. So if ever they report 5% down, that would put them roughly, 5% down would be roughly, let's call it about 220. So we went 2 standard deviations. I went with the 210s, which is roughly 10% away from the current share price, right? So just 2 standard deviations. Toyota's a very solid company here, guys. We do have a little bit of support zone right here, right? The 200 area is really where you start getting a little bit more of that support. And that'll be a hefty sell-off for Toyota. They're usually not very volatile on their earnings at all, so I'm not expecting a big move on Toyota. If anything, we should probably just be able to run away with pretty much all of this profit by tomorrow morning. So we'll see what happens with those, but fairly conservative play nonetheless. And then we did some Teslas today. So we didn't get the best premium on Tesla, but we went below the expected move on Tesla. So the expected move on Tesla, it's not an earnings play. Obviously, you guys know they had earnings the other day. I just went for a little bit. You guys remember how we were saying that Tesla is currently trying to set some form of daily, we're trying to find the daily higher lows here, but even if we drop further, we're just trying to set maybe the weekly higher lows and use this whole area as confluence. Well, I went with the 167s for Friday. So 167 is really the lower end of this range right here. I went with the 167.5s for Friday. We didn't get a ton of premium, but I went really conservative with Tesla, guys. To be frank with you, I just don't fully trust it yet. And as you can see, this is the first time in pretty much 2 months that I've played Tesla. So we'll see how this one goes, guys. And that's pretty much the gist of things on Tesla. Tesla, the expected move, as I can show you guys, 172. So we went below that, right? We went the 167.50s. We'll see what happens with those. And then lastly, we went with the Wins. Wins 89. They had earnings in the after hours. They performed very good. So Win, before their earnings, was trading about 97. 89 would really bring them down to pretty much the bottom of, peak fear that we had a few weeks back. That would pretty much be, about 8% to the downside. Win was only pricing in about a 3-4% move. So I went with 2 standard deviations and same rules apply, just targeting the lower end of prior support zones, right? And they reported in the after hours and the company did fairly good. They're actually up. So we should be able to close these pretty much worthless by tomorrow morning. Not a very big contract, guys. I went fairly light on these, 15 cents a pop. So all in all, should be a fairly good day tomorrow, depending on how these open. Should be able to make some easy premium tomorrow again. So hopefully that was educational. Few mistakes that I made today on the day, guys, was Disney didn't close it fast enough. My Disney contract was actually break even when the stock opened. I should have just taken it and ran. I wanted to let it run to see if we could have recovered a bit more and maybe ended my contracts in the profit, but it's just the market didn't give it to me, guys. So I just closed that one at a loss. And the other thing that I should have probably done, but I didn't do because I didn't trust them, I wouldn't say it's a mistake, but maybe a missed opportunity. RIVIAN and Lyft, their premiums were so juicy, like 25-30% away from the price. I mean, the Rivians, you could have got the $8 strikes on Rivians for like 16 cents. But, very tough, right? If they would have had a big miss, you might have been in trouble with those contracts. And same thing for Lyft, guys. Lyft is notorious for huge swings after earnings. I was looking at the premium, guys. I could find some premium. I could find 12 cents on the 13s all the way down here, right? That would be a drop of roughly 21%. And they were paying 1% in premium down there. But Lyft earnings are so tough to play sometimes, right? They're not Uber. I know they're growing, but maybe a missed opportunity. The premium was juicy, but I just didn't want to take the risk. So those are 2 trades that I could have taken. The premium was there. We had a wide margin of error. I just didn't go with them personally. I went with some more, kind of boomer plays, right? Didn't go very risky on those. So all that being said, guys, hope you enjoyed today's video. That's pretty much all I have for you. If you did enjoy it, consider dropping a like on the video. Would really appreciate it. Also consider subscribing to the channel if you're new. We do these videos every single Monday to Friday after the close. And as usual, guys, if you have any questions at all, please feel free to ask me down below in the questions. If you want me to do TA on something, macro questions, if you have an options question, anything you want, guys, leave it down below and I'll get back to you within the first 24 hours. Take care, guys. Happy trading. See you tomorrow after the close. Peace.